goodies, goody, goody, yum, yum.
I'm delighted to have the opportunity to speak to Mike Waters today about what's been going on in the market in the last few months. Unfortunately, Mike's decided he can't be bothered to actually attend and has disappeared off on holiday. So, I don't really know what to do.
I'm still here, I haven't gone yet.
Nice. So Mike, if you could start off by giving us a bit of a view of what's been going on in the fleet market. Let's start there, because that's usually where we start.
So, what's going on in the fleet market at the moment? It's a good question. I guess the thing that's exercising everybody's mind at the moment is still cost. I hate the phrase, but cost is still king. And there's a whole host of inflationary pressures that fleets are having to deal with. Inflationary pressures. And tyres is one of them. So there have been big increases in the raw materials costs for the tyre manufacturers. So the price of natural rubber is heavily inflated. And the price of synthetic rubber, driven by other commodity price increases like oil, is also pushing up the production cost for the tyre manufacturers. So it's an area that fleets really have to focus on, and good tyre management is absolutely essential. If you want a good tip in relation to this one, look at the tyre company's share prices. Goodyear, for example, is up over 20% since the start of this year. And this is going to continue into next year. So tyres is one to keep an eye on. Insurance costs, again, the motor insurance market is completely underwater. So the motor insurers were losing or paying out £120 in claims and expenses for each £100 they took in premiums last year. So they've got some real challenges. One of the ways that they're going to get around this is to push up premiums. They're talking about a 10% increase this year and a 10% increase in 2012. So insurance, plenty of risk with insurance. Daily rental companies, we talked about this earlier on in the year at the Majetski. Ooh, jet ski, we'll be doing that on holiday next week while you're watching this. The Majetski Stadium, yes, we talked about rental, and the rental companies are operating on different terms, so less buyback. They're having to take more risk. Therefore it's impacting their cost base. We also have some manufacturers restricting supply to maintain residual value performance. That's another factor. The big one to watch out for on rental is next year, and the Olympics. Think how many people are going to be in this country looking for rental vehicles. So during the Olympic period, supply might be something of a challenge. Other things, not an awful lot of change on maintenance. Maintenance still highly competitive between franchised and non-franchised. I think probably those are the main things. Oh, a bit on new cars. So new cars, the manufacturers are having to cope with the same commodity increased pressures as everybody else. So prices of raw materials, steel, rubber we've already mentioned, etc., continue to rise. One, I guess, bright spot hopefully on the horizon as we get back to a more orderly new car market and relatively stable volumes. Hopefully lead times will start to come down. As long as there's enough rental supply in Portugal next week, to be honest, I don't really mind.
So Mike, we've seen a lot of volatility in the oil market in recent months. Can you give us a picture of what's going on now?
Okay, so okay, Graham. So what's going on in the oil market? Well, I guess the good thing over recent months is that we haven't seen any particularly bad or extreme spikes in the marketplace, but we have seen the usual degree of volatility, with price ranging since the start of the year over something like $20 to $25 a barrel. The price was up around $125, $127 until fairly recently, and that was clearly, as always with oil, driven by geopolitical concerns, and in particular events in the Middle East and North Africa with Libya. The price has come down in the past couple of weeks due to the IEA releasing stock into the marketplace with the specific intent to try and bring prices down. As you might expect, the IEA being a consuming country organisation, that's upset OPEC, the major suppliers, and OPEC has said that unless they stop messing with the market, OPEC will consider reducing supply. All things being equal, I think the price probably will rise slightly from where it is at the moment towards the end of this year. And in terms of pump prices, from where we are at the moment, I think we've got a slightly softer patch down into the mid £1.30s on diesel during Q3, going slightly up towards 140 towards the end of this year. However, we have a New Year bonus due from the Chancellor in the form of a 3p duty increase on the 1st of January. So something to look forward to.
So it's been a busy time with manufacturers, Mike. Lots going on in that part of the market. Can you give us a bit of a view of what you think the key takeouts have been?
Right, so you asked how the manufacturers are doing at the moment. A couple of things to the manufacturers really. The first thing to say is the manufacturers really aren't rowing back from their focus on reducing CO2 emissions. First 6 months of this year, average new car CO2 emissions are down at 139 grams per kilometre. That's down from 143 just towards the end of 2010, so big improvements. Still a difficult year in terms of private registrations, but it's fair to say that Fleet is holding the whole thing together for them. Sometimes they don't like the leasing companies poking the roar in, but in this situation they certainly do. So registrations to companies at the moment are over 56% of the market. Even allowing for that, the new car market is going to be down around 5% by the end of the year, but van registrations are performing extremely well. So there is some light on
EV market development. What's that?
Ooh.
Is that energy something?
Electric vehicles.
Oh, electric vehicles.
Okay, we're seeing the early development now of the alternative powertrain marketplace, so we're seeing electric vehicles starting to appear. I think it's fair to say that in the early days electric vehicles are going to be a niche product rather than mass market. So far you've got around 600 people that have taken up the government's £5,000 electric vehicle grant programme, and the market this year, SMMT forecast at about 1.3% of total registrations. So that's somewhere in the region of 25,000 vehicles, but the vast majority of those will still be things like Prius hybrid. I think in terms of the development of this market, the incentives provided by government are going to be absolutely essential. Otherwise we run the risk of it becoming a disorderly market and potentially ending up something like a bit like LPG. So it's going to be really important. Still lots of investment from the manufacturers, lots of diversity in terms of different powertrains, and lots of manufacturers working together and positioning themselves effectively for developments in this area. BMW, for example, have just launched their BMW i brand, which will sit alongside the M brand. I will cover all their low emission vehicles and new technology. The brand is in place 2 years before the vehicles that will support it, the i3 and the i8, but it gives an indication of the kind of investment and commitment that the manufacturers are providing in this particular area. Are companies that interested? Companies are interested, thinking back to earlier in the presentation, if environmental or alternative fuel vehicles save them money, and that is going to be certainly in the short term, the defining feature of this particular segment of the market.
And everyone's favourite topic, Mike, regulation. Gets us all fired up, gets us all excited. What are the big things happening here?
Regulation. I have to say, Graham, I'm extremely disappointed that regulation doesn't float your boat. I mean, it's absolutely fundamental to the core development of all our markets and businesses going forward. You think about things like continuous motor insurance, like the EU White Paper on transport development, like lease accounting, 2 biofuels directives. Actually, I think you might have a point. Bottom line, it's all a load of red tape.
Mike!
Sorry.
Oh dear. So Mike, we've talked about the big picture, we've talked about the market, we've talked about all the big things happening out there. Give us a really short-term view of what you think the next 2 weeks are going to look like.
Next 2 weeks? Well, I guess hire a car from Faro Airport into a bar, some sunbathing, bit of swimming, jet ski I've already mentioned, and